Hello everyone, I'm Joel Schemmel, your host for Talking Trends, where we explore real estate trends and provide luxury lifestyle updates for the greater Sarasota area. Today, we're diving into the results through the second quarter of 2026 compared to the same period in 2025. As I do every quarter, I break down the Sarasota County luxury real estate market into single-family homes and condominiums, and then further into price points. 1 to 2 million, 2 to 4 million, over 4 million, and the ultra luxury market over $10 million. So let's jump right in. From a high level, the first half of 2026 brought some encouraging signs for Sarasota's luxury market. We might even be seeing a fundamental shift. Sales increased in most market segments, while inventory declined across much of the market. Months of supply also came down considerably in several key categories, suggesting some of the excess inventory we saw building through 2025 is beginning to be absorbed. Starting with single-family homes, sales activity improved across every price point. In the 1 to 2 million range, sales increased nearly 6%, while active inventory declined more than 30%. Months of supply dropped from 6.1 months to just 4 months, and average sold prices increased slightly, up about 2%. The 2 to 4 million market also performed well. Sales increased 22%, while inventory declined 17%. Months of supply fell from 8.8 months to 6 months, and average sold prices remained essentially unchanged. This is a good example of a market gaining activity without experiencing significant movement in pricing. Moving into the over 4 million single-family market, we saw an even greater increase in activity. Sales were up more than 70% compared to the same period last year. Inventory increased modestly, but months of supply fell substantially, from more than 26 months to approximately 17 months. Average sold prices increased about 2.5%. In the ultra luxury market over 10 million, 6 single-family homes sold compared with 3 during the same period last year. However, with 37 properties currently listed, supply remains elevated. As we've discussed before, percentages and average prices in this category can vary considerably because of the relatively small number of transactions. Turning to condominium, we're seeing a somewhat more mixed picture. In the 1 to 2 million condo market, sales increased an impressive 49%, while inventory declined 12%. Months of supply dropped from 8.6 months to 5 months, while average sold prices remained essentially flat. This represents one of the most significant improvements in the condo market compared with last year. In the 2 to 4 million condo segment, sales increased approximately 13%, inventory declined slightly, and months of supply fell from 8.7 to 7.5 months. Once again, average pricing remained incredibly stable. The over 4 million market, however, continues to face some challenges. Sales declined approximately 21%, and months of supply increased from just under 21 months to more than 24 months. Average sold prices were also down approximately 14%. Finally, there were no condominium sales over 10 million during the first half of 2026. With such a limited number of properties and transactions in this category, it remains difficult to draw broader conclusions from those figures alone. So what's the big takeaway? After watching inventory build and buyer leverage increase throughout 2025, the first half of 2026 shows signs of finding greater balance. Sales activity is up in 6 of the 8 categories we track, and inventory declined in 5 of them. Most importantly, months of supply has fallen substantially across several of the core luxury segments. This doesn't mean we've suddenly shifted back to a seller's market. Buyers still have choices and negotiating power, particularly at the higher price points. But compared with where we were a year ago, the data suggests that quality properties that are positioned and priced appropriately are finding buyers. For buyers, there continues to be a meaningful selection and opportunity in the market. However, with decreasing inventory, buyers should get off the fence if they find what they like. For sellers, improving absorption is encouraging, but realistic pricing, preparation, and quality marketing remain critical to achieving a successful sale. And always remember, while we review county-wide trends, real estate is hyper-local. Your neighborhood, your building, even your specific street may behave very differently. That's why having an experienced, market-savvy advisor by your side matters more than ever. In today's market, trust is the difference. Thanks for joining us today. We look forward to seeing you on the next segment of Talking Trends. Till then.